Good morning, everyone. Welcome to today's webinar. Today we're covering mastering sustainable cash flow indicators to monitoring your business for success. My name is Cliff Turner. I'm an entrepreneur ecosystem strategist here with ATB, and I am proud to be the host for today's webinar. I'm in Edmonton right now. I'm in the Entrepreneur Center here. If anybody's wondering what that is, just check out atbentrepreneurscenter.com and you'll find all kinds of good stuff there. But I'm here in person today, and I'm just wondering where everybody else around the province is tuning in from. So if you could jump in the chat, throw in the town, the city, the municipality, whatever applies to you, so we know kind of where we're getting everyone from. And if you'd like to, throw in some details about your business too. How long have you been in business? What's the name of it? What industry are you in? Always great for everyone to know who's here in the room. To get us started, I'd like to kick us off with a land acknowledgement. So for myself and those joining from Alberta, we acknowledge that the land on which we're all present is the traditional territory of Treaties 6, 7, and 8 nations of Alberta, and we also acknowledge Treaties 4 and 10. We acknowledge the ancestral territory of the Cree, the Dene, the Blackfoot, the Stoney Nakoda, the Saulteaux, the Ojibwe, the Tsuut'ina, the 8 Métis settlements, and the homeland of the Métis people. We acknowledge the land as an act of reconciliation that honors the authentic history of Turtle Island and the original people of this territory. With that, I'd like to introduce you to today's speaker. Today we have with us Kirsha Campbell. Kirsha is going to be sharing some critical aspects of sustainable cash flow and how we can leverage leading and lagging indicators to drive strategy and growth.
Cash flow catapults your business. Cash flow will take your business to great and greater and greater and greater levels. Welcome to our webinar today, Mastering Sustainable Cash Flow, Indicators to Monitor for Business Success. I'm very excited and honored. I deem it a pleasure to partner with ATB to present this webinar to you today. Do share your questions in the chat. Thank you for sending in some already. I'll be answering some throughout our presentation and a couple at the end and any others that do come in. Do note the disclaimer at the bottom of the screen, and yeah, let's get started. Cash flow will catapult your business. Cash flow will lead to growth and growth, greater growth and greater growth in your business. Cash flow will do for you what profits won't do, what sales won't do for your business. And cash flow is the lifeblood of your business. You know, as humans, we can't survive without oxygen and air indefinitely. So cash flow is like the oxygen of your business, and your business won't be able to survive without cash flow. And it really doesn't matter the stage at which your business is at. If you're a startup, if you're growing, if you're not for profit, cash flow always applies. Our agenda today, we're going to talk about what is sustainable cash flow, leading indicators that will foster growth, lagging indicators to monitor in your business, and understanding those cash flow red flags. I just want to share this word that means a lot to me. I usually start my presentations with this word, Ubuntu. It means, it's an African proverb, an African word meaning I am because we are. It's highlighting the importance of team, you know, the impact of others on our journey. And why is this important today? It is important since when we are going to dive into all this material today, it might be overwhelming for some. It's going to be new for some persons. You know, it's going to seem like, okay, I'm just so overwhelmed about numbers again. You might get that feeling. However, do remember that everything here can't be done by yourself alone. You're going to need a team. You need support. You need, getting that learning in. And you've taken that first step today by being on our webinar today. So I am because we are. There's no judgment with reaching out for help and increasing learning and just getting more support. Let's dive in. What is sustainable cash flow? What is sustainable cash flow? So cash flow is basically the difference between money coming into your business and money leaving, right? So actual cash, monies that you take to the grocery store, monies that you used to pay your suppliers for whatever reason. So what really is cash flow? The difference again between monies coming into your business and monies leaving your business. So let's say you have sales of, like, you're getting monies coming in from sales for $100 and your expenses are about $80. Your cash flow is $20. However, that's just cash flow. What is really sustainable cash flow? That's a little different. Sustainable cash flow is cash flow that will last through your business. It's going to continue. It's going to endure the down times. It's going to endure the rough times. If you have a drop in sales, you're still able to sustain your business through that cash flow. If your expenses are going up, we think of, unexpected repair costs, labor costs increasing, right? You are still able to manage your business. Your business still survives since you have that sustainability from sustainable cash flow. We think about a couple of years ago or so, COVID, gave a lot of businesses that downturn. Some businesses were okay, some were not. Why were those businesses that were okay? They had sustainable cash flow. I did have clients who were actually growing during that time, despite what was happening. Another thing I do want you to remember, or you probably haven't heard this before, but don't forget this: profits are not equal to cash flow. And I'll say it again: your profits are not equal to cash flow. We think of a lemon and a lime, right? They are, similar and differences between them. So they're both citrus fruits. They both provide vitamin C. However, depending on the flavor you want for your salad, your drink, or your meal, you might opt to use a lemon or a lime. So different measurements, they bring different things to the table. So profits and cash flow are important measurements in your business. However, they are both different. The measurements are different and they give you different information. The other thing I want you to note as well is your bank account balance is not your cash flow. Your bank account balance is not your cash flow. So bear these few issues in mind as we go through our presentation again as well. Okay, so leading metrics that will foster growth. What are those leading metrics that do foster growth? And I'll share quickly about a part of my weight loss journey. So here I was losing weight, all happy, and then I hit a plateau. And it was at a time where I knew I was doing everything I was supposed to do. I was eating properly, I was exercising, I was getting that rest. However, the scale was just not moving. And I was like, no, something is wrong. So I went to my trainer and she was like, okay, let's do your BMI. And that's taking your body mass index, those measurements. And when she monitored my measurements, she realized that, okay, your body is shrinking. However, the scale is not moving, and that is not unusual. And I won't get into all the science of, body makeup and all that. However, different measurements and different metrics will tell you different things about your business. So do bear this in mind. So the scale is important, right? My BMI index is important. However, they do indicate different things about your business. And when we talk about leading metrics, we are looking at those metrics, those indicators, those measurements that will tell you, your business is heading to growth. Your business is not heading to growth. You are able to also use those measurements, those metrics to really know, what should I change? What should I do differently? What should I continue doing to keep my business on this growth journey? So it's basically helping you to monitor how your business is performing. And you got to keep your eyes on all of these metrics. It can be overwhelming for one person. Again, that's why you need support. However, monitoring these metrics will lead to growth and will lead to sustainable cash flow. The first one is using what's called your cash flow forecast. Now, this forecast can be done daily, monthly, or weekly, depending on the season or what's happening in organizations. I've even used it monthly, right? So depending on what's happening, you got to dive a little deeper and monitor even more closely. So what is this about? You start with your opening bank balance, your reconciled bank balance. So you're not picking up your balance from your bank account. It has to be your reconciled bank balance. And a bank reconciliation is basically where you're cross-checking what your records say internally with what the bank says has happened in your account, kind of like balancing your checkbook if you do use a checkbook. So this process is very important, and it should be done at least monthly. It's going to help you pick up if there are any fraud happening with your bank account, if there are any errors, right? So the bank reconciliation is a very important tool. So again, that opening balance, you start with your reconciled bank balance. Yeah, right? Your internal reconciled bank balance. And then you list all the monies that are coming in, if you're getting it from sales collection, accounts receivable, if you probably have, funds coming in from a loan, stuff like that. And you also now track what are the monies that are going to leave your business. Actual cash you're talking about, payments to suppliers, payroll, legal costs, rent, taxes, all the expenses, those payments that you have. And you are also ensuring that you know the time as much as you can estimate the time. Are you going to get this in the last week of the month? Are you going to get this in the first week of the month? You have to make this payment on the 15th, the 18th. So you are really tracking the flow of cash, monies in and out of your business. And when you get that ending balance, it tells you so much, right? When you actually see on paper on your spreadsheet the movement of cash in and out of your business, it will help you now to decide what strategies can you, what strategies can you apply? So for example, you might have wanted to purchase some machinery. When is the best time to do that? You might be able to say, okay, I'm gonna get in a bank overdraft by the end of the month. I need to be proactive and make some other decisions, right? Are your collections really coming in? Do I have enough surplus that I can even explore savings or investment for my business? So this is one of the reasons, a few reasons why the cash flow forecast is so important. And one of the questions that came in was how to successfully monitor and track cash flow to ensure you're profitable. This is your tool, the cash flow forecast. And do remember that profits in your business have to lead to cash flow. If they're not leading to cash flow, you have a problem again as well. And another question that came in was how to maintain a solid cash flow despite ebbs and flow in the market. Very good question. So ways to mitigate this, to reduce the risk of your cash flow being all over, is one, explore different streams of income. So you can have, for example, a restaurant business and you're selling products, food, meals. You're also going into catering. You're also exploring school lunches. You're also exploring classes. A lot of restaurants changed that, embraced that during COVID. They were actually teaching persons how to make a meal, how to use their products, giving them very awesome tips. You can do parties and just other types of catering. So you're still a restaurant, however, different streams of income. And also you can diversify the industry. So you might be saying, okay, I'll just focus on, the lawyers. I'm just focusing on lawyers, for example. You can expand the different industries that you supply. If you have, for example, an HVAC business, you can again do, yes, you're fixing equipment and so forth. However, you can sell parts. That's diversifying your income. You can also look at selling equipment. I know persons, they do that. They are buying equipment and reselling it as well. So different streams of income will help you to mitigate the changes in the market, which are unpredictable sometimes. Timing is another way to mitigate the ebbs and flow. Understand your seasons, right? Do most of my sales occur in summer and winter? What are the trends? What are the changes in my client, my customers' demand? So these are things you look at to manage your income coming in, your cash flow as well coming in, and make adjustments as needed. On the other end of the equation, review your expenses and your costs, productivity, sales, right? Efficiencies. You got to look at that, my labor team, and we'll dive more a little bit into that, and plan for taxes. Taxes are the biggest expense, and I see a lot of businesses are not planning for taxes. Planning for taxes is where you're sitting down with your tax expert, your CPA or other tax expert, and finding legal ways to pay less taxes. So again, all these strategies will help you to mitigate the ups and downs of the market and have that solid cash flow. Because when you have a surplus, you're able to save and so forth. And then when there's a downturn, you are prepared and you still have some cash coming in from your different sources. The other tool which we're going to talk about is managing what's called your days sale in cash. So have you ever logged into your bank account and made a decision? Let me see, raise your hand or you put it in the chat. I have no judgment here. You've logged into your bank account and say, I have 20,000, 10,000, 150,000. That means I can do this. I can purchase this material. This means I'm okay. From today, don't do that anymore. It is such a risky process because your bank account does not tell you the full picture, the entire picture of what is happening in your business. So you do want to desist from that. So what do your days sale in cash tell you? Basically, it's telling you based on the sales you made, how much do you have in your bank, and is it bank account, and is it a good number? Is it a reasonable number, right? So let's dive in a little bit. So let's say you made a sales of $1 million and you're like, okay, I have $50,000 in my bank account, or you made sales of $100,000 and you have $50,000 in your bank account. Which situation would you say is a better situation, a stronger situation? Company B that made the sales of $1 million, or company A company A made $1 million in sales and company B made $100,000 in sales, and they both have $50,000 left in their bank account. Again, company B is in a stronger position. So that is a very, very important metric that is used to really assess how your business is going. If you're finding, for example, you're in the position of company A, have 50,000 in your bank account, again, it triggers business owner, CEO, entrepreneur to find out what is wrong, where you really losing money, and not only finding out what is wrong, how can you fix it quickly, timely, right? You might have to make certain strategic changes with the sales, cost of goods sold, expense. There are different things you can dive into to really fix that and mitigate that impact that's happening in your business. However, this metric, again, is an important metric to use since it does tell you a lot about your business. We're going to move over to budgets, that dreaded B word. And I know a lot of persons, when they hear budgets, the first thing is like, I don't want to be restricted, or, I've heard persons say it's too overwhelming. And, those are valid emotions. However, budgets will grow your business. And I'm going to say it again. Budgets, when used properly, will grow your business. It's a very, very, very important metric that is needed to be used in your business. Why is it so important? You are able to track your actual results versus the results you targeted. And it doesn't stop there. It's not that you create this budget, and you're like, okay, this is it, it's over there, and you continue operation. Budgets need to be used in a powerful way. So when you've completed your budget, and it's a plan of action, and plans can change. However, when you complete your budget, the next step is to compare what actually happened and then you get a variance. So look at, I'm not sure, I'm hoping you can see line 1 where the actual sales are $109,750 and the budget is $125,000. So right there, what happened was that your actual sales are less than what you budgeted for. And this is now the variance, the difference is 15,250. However, it doesn't stop there. It's now what I like to call looking beyond the numbers, finding the story behind these numbers. So why is it that you sold less, right? So there's so many different possibilities, reasons. However, as a CEO, entrepreneur, and business owner, you got to find out why. And when you find out why, then you're again able to change your strategy. You're able to make timely decisions. You're able to take corrective action quickly. So could it be that you misjudged your customer demand, or customer demand has changed? Could it be something with the quality of what you're offering? There's a glitch there. Could it be how you're packaging? There's so many reasons. Could it be the season? So you do want to ensure that you're using budgets in your business. Remember, budgets, it's not just creating the budget, you got to conduct your variance analysis at least once a month. And when I do budgets for my clients, I dive deep because it's a very detailed process. You got to look at what are your targets, what are your goals personally and for the business as well. You got to look at what are the resources that you're going to need. So could it be, for example, in this case, you had budgeted 125,000 for sales. However, you didn't think of in more detail what would you need to make that sale. So the resources, the team members that you need. Did you need a different skill set, right? You can track and review and just really know what is really happening in your business with budget. It's a powerful process, and I always encourage those who I'm serving and training, use your budgets in your business. So our next metric is percentage of your sales collected. And this is especially important because a lot of times you do have situations where you have payment plans, and depending on the industry you're in, you don't get all your monies coming in at the same time. So for example, in the legal industry, right? You do the service, you have progress payments, yes. However, you're not getting all the cash up front. And what that leads you to is having what's called accounts receivable. Persons do owe you. So that is again where you want to ensure that you are looking at that. So let's say you made sales for 500,000, right? And you are like, okay, I have sales for 500,000. However, I've only collected 20,000 from that in sales. That right there is a red flag. And that is a metric you always need to monitor, measure in your business. Accounts receivable, outstanding, large amounts for indefinite periods, long periods will sink your business and sink it quickly. So you want to pay attention to this metric. Based on my sales, what percentage of my sales have already been collected? And there's a whole strategy to work through that. I'll give you some quick tips that you can implement. Make it easy for your clients to pay you. It starts with the invoice. Make sure your invoice is correct, it's clear, all the details are there, payment terms, payment options. Make sure you're building that relationship with your suppliers, your clients, so you know what they like. For example, if they prefer the option to pay by Interact versus using a credit or debit card, honor that. Or if they prefer to use cash, just respect your client enough to know that, they are such an important part of your business that you want to make it easy for them to pay you and understand that part as well. Okay, I did the budget. We can't afford the cat. So, of course, we have even animals, right, are seeing the importance of budgets. Okay, So far we've looked at sustainable cash flow, leading metrics that foster growth. Let us move over now into lagging indicators to monitor. So what are lagging indicators? Basically, they are where those are past. So those metrics have already happened. However, they're just as important, right? So it's in the past, however, it's still important for your business. Now I'm going to share about my first vehicle. So one of the first vehicles I had on the dashboard there, the indicators, those signals were not working. So what that means is I could have low tire pressure and I did not know. I could have, low gas, low fuel, and I did not know. So I'm there driving along and I'm out of gas, or I'm there driving along and a tire goes, because I just had no indicator. There's just nothing to warn me. I'm relying on my judgment, which is not always 100% correct with vehicles. So this is what I went through. It's kind of funny to look back at now. However, when you're in that situation, it's not a very funny thing at all, right? So you as business owners, CEOs, and entrepreneurs, don't be like that. You got to know what's happening in your business. You got to be using the indicators and metrics to understand and know what are those signals? What is this saying? What is this indicator saying in my business? What does this really mean? What action should I take? What should I not do? What should I change? These indicators, these metrics do help you to improve on the overall operation, growth, sustainability of your business. So let's dive in. The first one is sales, right? Sales, that's basically where whatever you're producing or selling, you're getting, monies. So sales, even if you haven't gotten paid as yet, it's still counted as a sale based on accounting standards, right? So sales is in the past. It's important, however, it is in the past. And it's showing what you've already sold. It's showing, it's indicating too, what do you need to do more of? It's indicating seasons and cycles. It's indicating all that. So you do want to be aware of your sales. And sales, revenues, income, those terms are used interchangeably. And someone did have a question, how do you calculate your annual revenue? And this is it. So you're adding up everything you sold, January, February, March, April, May, June, July, August, September, and depending, of course, on your fiscal year. And you're adding up all that, even if you haven't collected it as yet. So that is how you calculate your annual revenue. It is important for so many reasons, right? Especially it's important for analyzing what's happening in your business. If you need to go to a lender, so many reasons you need to know your sales. So again, it's a lagging metric. It's past. However, it is just as important to keep your eyes on it too. Labor cost. So labor cost. This is where you're thinking about those monies you're paying your team, whether if they're working salaried or hourly. And again, it's in the past. It's already gone. However, your labor cost will indicate a lot about what's happening in your business. Just by looking at the labor cost percentage, not just the dollar amount, the percentage, and be able to quickly, share with my clients, there's a lack of productivity here. Like we had an example once and we looked at the numbers and I'm like, what's happening? And, they were able to say, well, we had someone, they stayed longer than they should have on a job, and right away. So your numbers will be indicating what's happening. So with your labor costs, you want to look out to see if how much is it contributing to sales? Is it really contributing to sales? Because you might have people working and they're not contributing to sales, right? And your team should either be saving you time or contributing to your sales. It's, just that clear cut. So you do want to look at that, dive deep. Do you need to, do they need more training? Is it a good mix when you put them on certain teams? Is it that they're wasting time? Are they not being productive? Can they do this job in a faster way, more efficient? So these are some of the things you do look at with your labor costs. I'll quickly share that with your labor costs, it's not just the amount you pay your workers, your team, if they're hourly or so, you got to also incorporate payroll taxes. You got to think about benefits, insurance, whatever other health benefits, right? Equipment that they might need. So all these things, these other areas impact your total labor cost. Cost of goods sold. That is basically your cost to produce, the cost of your service, and it varies so much. So you want to understand your cost of goods sold. It helps you with determining too if you had the right price. It tells you so much. It's already in the past. However, it gives you the opportunity when assessed and dissected to improve going forward. So it again helps you with determining your price. It's one metric that helps that. You got to look at, is the raw materials coming from the best source, the best quality? Storage costs. A lot of times people don't think about storage costs. Inventory, that's another one. If you are in the product line business, do you have too much inventory? Are you running out of inventory? In those cases, you got to dive into deeper, pulling up metrics like your economic order cost. When should you start reordering? What is the ideal level of stock that you bring? Should I change my supplier? So you're looking on what should you sell first? Dive in so much when it comes to product. And even for the service line business, you got to look also, what are some licenses that I need? Can I be more efficient? Do I need support? A lot of times it could be you're like, I can do all this by myself. However, if you outsource some areas of your job providing those services, or depending on your cash flow, and so you might not be able to do that as yet. However, can you work more efficiently? Can you use some automation? So there are always ways to improve your cost of goods sold, and that is why it is such an important metric to use as well in your business. Net profit. This is our last one. So net profit is where you have sales less your cost of goods and your expenses, right? So net profit, some persons might call it net profit, your net income. It is not cash flow, as we said earlier. However, your net profit should lead to cash flow. And if that's not happening, again, it's indicating that there are money leaks in your business. It's indicating that some things need to be addressed, whether it's from the sales side or the cost of goods side or the expenses. And even for those who are in the nonprofits industry, a common misconception is that nonprofits can't make profit. And that is just a very bad myth that it's so widespread. All businesses need to be profitable. You can't continue to not having profits indefinitely, right? So again, your net profit should be able to cover even your taxes. And that is why tax planning is so important. So again, your net profit is a very, very, very important metric to use. And when I'm reviewing, I do a 360-degree review for those my clients. So I'm looking inside the business, what's happening, outside what's happening in the industry, competitors, the past and the future. So again, it's so important, this metric, because this net profit helps you to do that 360-degree review. It dives so many areas in business. And I was training executives in Asia and the Caribbean, and a part of the course I was like, let's come on, everybody come with their joke. And one of my attendees, she came up with, why did the businessman throw all this money in the river? He wanted to see his cash flow. So it's important. I don't believe it actually flowed as you wanted it to. However, implementing all these different areas that we have been talking about will definitely help you to see your cash flow. If you have some cash flow joke, feel free to share it in the comments as well. It's always important to laugh, right? Okay, our last area, understanding cash flow red flags. Red flags show us that something is wrong. Something is wrong. And it is so important to be able to identify the red flags quickly and timely, right? There's a popular myth that I'll quickly address. Bankruptcy happens overnight. We've seen so many businesses go down COVID time and outside of COVID, and it's a myth that I've heard for years and years and years growing up. Bankruptcy happens overnight. It's never overnight. There are often signs that are ignored or just not understood, right? But there's always a sign that you're heading to bankruptcy. There's always red flags. And we're going to be diving into some of these red flags now and quickly talking about some suggested solutions. And then we'll be able to wrap up. So the first one, cash injection. You find as the CEO, the entrepreneur, the business owner, even if you have a company too, right, you're constantly having to put money in the business to survive, to stay afloat, to cover payroll, to cover paying for goods, to pay for, utilities. And it's not a one-off situation, right? This is a pattern. It's like every month or every few months you have to do that. That is showing that something is not going well in your business. And there's a term, you can't exercise away a bad diet. So putting cash injections in and in and in does not solve the root of the problem. What is contributing to that? So you got to figure that out first so you can solve the problem. Is it that you're not priced properly? Is it that your collections are not coming in? What is reason for you having to constantly put those cash injections in? So definitely that solution is to find out the reason first, what's leading to that, and then you solve that problem. Slow or no collections. So this is where we made the sales as we spoke about earlier. However, you're not seeing the collections coming in, or it's very, very slow or no collection. So a few things you can do with, and it's under managing accounts receivables. Take up the phone and call them, review your accounts receivable report. Who is it? Who owes me the longest? 30 days, 60 days, 90 days? And that's why reports are so important in business, right? Reviewing your reports at least on a monthly basis. So again, you take up the phone, you can make a phone call, you can say, can you give me, half of it now and the rest later? Because, some persons genuinely might have forgotten that they owe you. You never know. So that is one option, taking up the phone, negotiating. The other thing, if you're in a deep, deep, deep cash crunch, is what's called factoring. So it's a legal process where you sell those accounts receivable to a third party for a fee, of course, and you get the monies in less that fee. So someone might owe you 500,000 and you're like, I really need monies right now. So you sell it to the factor for 450,000, you get that in, you lose 50,000. However, your business does get that cash injection that you need. Environmental changes, right? There's so many different changes. It can be changes in interest rate, labor costs. There can be taxes, right? So it is important to understand your environment. So keep reviewing, be innovative, be proactive, ask those hard questions first. What if this happens to my business? Am I prepared? What if I lose? What if I get sick, right? What if some of my key members leave? Where does that leave me? Do I have a solid team? Have I started thinking about succession planning? Who will take over my role in the business, or do we have job rotation? So there are a lot of risks that are involved when it comes to your business environment and operation. So you do want to be on top of those and mitigate those risks. We can't eliminate risk. We try to mitigate it, reduce it. Unpaid accounts receivable. So this is where, you're not able to pay your bills basically. So you can ask for payment plans, you can cut expenses. A quick tool is, quick tip, review your bank statements, your credit card statements, and look at what you're paying for on a monthly or every few months. Do I really need this? Right? And those are ways you can be proactive so you don't get into this situation, or when you're there, that reduce liquidity. So you basically have less and less access to money. Your savings are going down. Your credit card is almost reaching its limit. Your line of credit is almost exhausted. You got to, again, sit and revisit, why is this happening? And then In the short term, you could be your own bank. There could be monies outside or from a family member, friend that you can borrow instead of going to the traditional financial institutions. And I'm not knocking banks, I'm just saying that's an option. Or, you could just use your credit card to, if you have a limit, if you have space on it, because usually for most credit cards, when you're making that payment, when you make a purchase, you have 30 days to paid. So that gives you 30 days to kind of get, things together and so forth. So again, that is just a few red flags and how you can mitigate them. So just before I take the questions, I have two additional questions. Someone did ask, what are the best bookkeeping practices? An excellent question. So when it comes to all we spoke about, the foundation is good bookkeeping, right? So you want to definitely, as your business is growing, change your systems for bookkeeping. You might have started using Excel. As you're growing, you need, a software, QuickBooks Sage, a reliable software. Look at your processes, right? Are you having, are you at an increased risk of errors and missing transaction? You made payments and you forgot you paid this because you don't have a proper filing system, record keeper. So you want to make sure your process is efficient and effective, recording your transactions. Your bookkeeper or whoever is recording your transactions needs to know how to record properly. For example, in COVID, some businesses were getting loans and some persons were recording it as income for accounting purposes. So if your bookkeeper doesn't know how to report and record properly, tax recording is different from accounting recording, then you're in trouble. So this is another good bookkeeping practice to ensure that your bookkeeper knows exactly what to do in the correct way. $1 in missing transactions can lead you to pay up to a dollar, so $3 in taxes. So again, let's say you have $50 in a missing transaction, you forgot this expense or, incorrect recording, it can lead you to quickly pay up to $15 more in taxes. And think of that times 1,000, times 100,000, right? So missing transactions cost you. So you want to make sure you are on top of the process in your business. The other thing for bookkeeping is separating your duties. Review, double check. There are persons who I just review their bookkeeping, right? Reviewing their reports, their transaction, or the entry has been done properly. So you want to make sure you're having separation of duties as much as you can, because I know some persons are small business. However, you can have someone just review what you have done or review what your bookkeeper has done. So again, double checking the transactions, the reporting, and so forth. Your chart of accounts, it's important that that is done properly. That is really how you're grouping the various transactions of your business. So you want to ensure that your chart of accounts is done properly and your bank reconciliation is done at least monthly. It will quickly help you to identify any errors, fraud, so many other things in your business. So you do want to be on top of all these to have good bookkeeping. And the other question we quickly had was handling growth, right? What do you need to look at within your business model to know if you're able to scale your business? So with growth, you want to ensure that, ask yourself this question: if I'm selling 100 products today, or I have 100 clients, if tomorrow that number turned to 1,000, would I be ready? Would you be ready? Right? Ask yourself that question. Do you have enough equipment, materials, the team to really handle growth? Do you have the capacity? Do you have a solid process? Is it clear? Or do you have a lot of mistakes happening, omitted records? Are you just so much confusion in your business? So you do want to be looking at that, and then prepare. A lot of times you might not be there yet, but you're preparing for that. So you're looking to the future. So I might not need, a solid team. I not need 10 persons. However, I'm training persons now. I'm having that standard there that is needed for my business. And another thing to ask yourself is, can you grow with this system? That's another thing to look at in your business model. Can you handle 20,000 transactions with Excel? It's going to be very hard. So you move over to a software automation, and also constant growth, right? So this other question was about, I'm in the constant stage of growth. I put everything back into the business. If anybody else is doing that, so put yes or no in the chat to support our other fellow business owner there. Do you find that you're constantly in a stage of growth and you're putting everything back in your business, and your bills are paid, but you're struggling to earn more? So I will also respond on this, that earning more is good. However, if your sales are not moving to cash flow and to profits, then earning more is not worth it. You got to revisit your model again. So not saying anything is wrong with earning more, but as you earn more, you want to definitely be increasing your cash flow and your profits too. You also want to remember that when you're earning more, you do want to ensure that your cost of goods sold is not growing way more than your sales are growing. So the cost of goods sold is that section of the business. It's like a part of the heart of the cost. So if you're spending too much on labor, on materials, then it defeats your growth. And most times profits is tied to your cost of goods sold and your sales. Are you also mitigating risk as you're growing? If an elephant sat on you or something, unfortunately, where would that leave your business, right? Do you have the solid team? Are your processes efficient? Do you have a succession plan? Mitigating all of these risks. If sales went down, what would happen? So your business has to be in that position to mitigate and manage these risks as you're growing. So those are, just some areas I would suggest you look at as you are growing and growing and growing in your business. Are there any more questions? I'll just go back to the questions.
Thank you so much, Kirsha. That was amazing. I love how you kind of use storytelling to show us the reds and the green flags, and not just what they are, but kind of where to see them. It's so important as somebody navigates a business, right? And
Thank you.
We do have quite a few questions that came through in the chat, but I want to ask you one of my own to begin with, if that's okay. Yeah, if that businessman threw his money in the river to watch it flow, if he added soap, would he also be money laundering? That's not even the worst joke I've told today. But yeah, some serious questions.
Yeah, that's a good point. I guess we're going to need to get the insights from our economists, right? Our government representatives.
Right on. All right, we do have quite a few questions that came in here. So the first one we'll cover is Gabriella. She asked, when you were talking about cash flow forecasting, and she asked, if you're starting a business and you haven't really had any sales yet to go by, how do you calculate what your revenue might be?
Okay, awesome question. So budgeting for beginners. So remember, budgeting is not based on the past. When I do budgets, we're not looking at the past alone. We're looking at the future. So you within yourself as a new owner, the first thing you do is look at, based on my capacity, based on, potential for partners and so forth, what can I make? And you set that figure, right? Is it that I can sell 100 products? And then you work backward, what will it take me to sell those 100 products? And from there, you can set your numbers and your sales. Yeah.
Right on. And yeah, maybe just to add one resource to that, I know the Business Link does free market research for startup entrepreneurs. I think you can find them at businesslink.ca, and that can help get a lot of that data to, like how big is the market?
Yes.
What could you realistically expect? Yeah.
Exactly.
Okay, let's see what
and they
other
tell you
questions
what
we've
the
got.
sales are and so forth. Business Link is awesome with that. They have the free resources. Yes.
Definitely. Yeah, they're so handy and so helpful. Let's see here. Another one came in from Nikki, and this is when you were talking about cost of goods sold. And she asks, if you have a service-based business, how do you calculate your cost of goods sold?
So thank you for that question, Nikki. So again, earlier it said that your cost of goods sold when you're a service business is what is it taking for you to make that service happen. So it's going to be your labor costs. It's going to be if you might have anything that directly relates to that. It could be also if you have any licenses, fees that you need to think about. But most times for service-based business, it's just going to be your hours. What time does it take? And there's always a challenge with hitting the right price. Pricing is such a tough topic. So you got to look back and there are ways you can kind of gauge it. You can say, okay, it might take me an hour to do this. And what else is involved? Do I need to print? You can just put all those costs in a package there and kind of work back to say, this is what it costs to get this service done. It's usually easier to look at it as a flat fee than per the hour. So that is what I would suggest for the service-based business too.
Perfect. All right, our next question is from Dean, and he's asking, how do you hold a client or a customer accountable to a certain payment schedule? And can you kind of set expectations, like saying they want to be paid within a week?
So great question. It boils down to the relationship because, to be honest, you might say put $30 on it and they ignore it. However, when you build that relationship, you are getting into their business as well. So for example, if you know that they make payments on Thursdays, then you build that relationship where Monday you're saying, oh, did you see my invoice? Is everything okay? Any questions? Is it ready for payment? You build that relationship. There are other things you can do as well, setting up pre-authorized debits where you can take the monies out of their account directly at the time. Some persons are definitely okay with that as well. And again, find out how they like to pay. Always be in touch with your clients, your customers, build that relationship. If they're going through a hard time, then you need to know about that quickly. So you can say, okay, you want to pay me half now, set up payment plans as well. So understand your clients. And I'm not saying to bend backwards for them and like you don't have any money, but make sure what a common agreement you're coming to benefits your business as well.
That's so interesting because I do find anything to do with, accounts payable, accounts receivable, it all seems like such hard, cold numbers, but really the relationships with the people that you're doing business with affect how that works as well. So that's
does. And sometimes if the invoice is not correct, persons will just put it down. They might not even let you know. So you got to have that relationship where you are constant talking. If it's a bigger company, you should know the accounts payable person. You should know who does the checks. You should be building that relationship.
Mm-hmm. Yeah, every business has people behind it, and that's where the key is, right?
Yeah, there's a human behind it. That's true. We forget that sometimes.
So true. We have another question from Tom here. He's asking, what is a healthy retained earning to keep in a business and when it's in its growth phase?
So retained earnings is not the same as profits. Let me just be clear on that. So retained earnings is an accumulation of profits year over year over year. And again, it really depends on what is happening in your business. There are times where, especially if you're in the growth stage, you might say, we're going to be investing in more equipment, in more locations, and your retained earnings will not be that high. However, the starting point I would definitely suggest is not a healthy retained earnings, is having a healthy profit margin that is leading to cash flow. So let's say the average in your industry is 15% profit. If you are at 5%, even before you start thinking about retained earnings, you got to find out what's wrong in my business. So it's I'm not saying not to be aware of a lot of metrics, but so many terms are floating around, and if you're not clear on them, it can so mislead your business. So again, when we talk about a stable business, it's usually not only the retained earnings, your other metric, the cash balance, you have a lot of debt. So depending on what is happening in your business, I would suggest start with having that profit margin and justify your spending, especially as you're always justify your spending and investments in equipment and so forth, especially as you're growing. Because growth is awesome, it's exciting. Growing too fast without the support, the systems can sink your business as well.
Perfect. All right, we have another question that it's a little bit similar in nature from Paul, asking about your opinion of this benchmark that he heard of. He's saying that some people say a 30-30-40 equation is a good benchmark, where 30% is cost of goods sold, 30% is overhead, and 40% profit. Is that, what are your thoughts on that?
It's never one size fits all. So depending on the business too, you can even be in the same industry, because I know restaurants, I work with restaurants quite a bit, and there are restaurants who the market, the industry says 10-12%, and there's some who are at 20. So again, it's never a one size fits all. What you need to ensure is that, even moving away from the metrics too, that you look at what type of business that you have. So 30-30-30, right? If you have 30% for cost of goods sold and 30% for expenses, that might seem a little bit unreasonable, because usually, and not quoting it, expenses are usually a lower percentage than your cost of goods sold on average. So it depends really on the business. So I would not start from the ratios. I usually start from looking at the makeup of the ratios to say, okay, what led to this ratio? And so dive deeper, and then we can justify what's there or what rate it should be. So 40%, 30% margin, depending on the industry again, because the industries are all different.
Perfect. Okay. One last question we had was from James, asking if you had any resources that you could share around a pricing strategy. We actually here at ATB, at atbentrepreneurscenter.com, we've got a video series on that I think Laura posted in the chat there. But do you have any other resources that you recommend?
And pricing is customized. So I would just give guidelines to say, definitely when you're looking at your prices, ensure you have all the costs involved. Sometimes persons are not thinking about other costs, insurance, utilities. Ensure you're taking into account all your costs. Also, take into account with pricing the market, right? Take into account also not just covering your costs, but what is the value that it means to that other person. What will it do for them, right? If we look at some of the luxury item, there's a Tiffany's paperclip for thousands of dollars, right? There all these things. So look at the value of what you're bringing to your clients to help you with determining pricing as well. It's never one size fits all for pricing. So bear all these other factors to lead you to get into that price. And inflation. A lot of persons forget about inflationary costs with prices.
Right on. So the common theme I'm seeing here is people need to do their research and really understand their industry and their specific situation, and not get too hung up on key benchmarks that might be a little bit of an umbrella statement.
Yes, and the benchmarks are very important, but just don't use them blindly. They're not just to be used randomly and without the understanding the story behind the numbers.
That's perfect. And we did have one last question, but I think it's more like a suggestion of something we should explore, because he was asking about this businessman that threw his money in the river, what his return on investment was. So I'm thinking this is a plug for what our next webinar should be.
Yeah. Yeah, because we could all try that strategy, right?
Exactly. Yeah, we got to try it out. Thank you so much for being with us today, Kirsha. This was amazing information. I know it was valuable for everybody in the call. I learned a lot too, so we really appreciate you being here.
Thank you so much. It was my pleasure, and I've put my contact up there if anyone needs to reach out to me. And thank you so much. Yeah, and I'm also on LinkedIn.
Awesome. Yeah, we'll be sure to connect. As a wrap up here, if everybody in the webinar, just to remind you, there will be an email coming out where you'll get a recording of this, plus a copy of the slides that Kirsha presented and some other materials that she's given to us to share with you as well. And also in the chat, my colleague Laura is going to put up a link for a feedback survey. We'd really appreciate your thoughts on this webinar, what you liked, what you thought we could improve on for next time. We really appreciate knowing how you think about these things. Also, remember to visit atbentrepreneurcenter.com. I sound like a broken record. I keep talking about it, but it's awesome. So go and visit it. There you'll see some of the events that we have coming up in the next few months. And just to highlight a couple, on April 30th in Calgary, we have an in-person session where we'll be providing an introduction to market and user experience research. And then on May 14th, the session is focused on streamlining and simplifying to skyrocket your business to the next level. That's a tongue twister. Both of these are also available for virtual sessions through a live stream. Also here in Edmonton on May 15th, we have an in-person session, and it's going to be the truth behind delegation and business success. So once again, all of that information is available at atbentrepreneurcenter.com. Please do fill out that feedback survey, and you'll see that email with all of this information a couple of days from now. We'll see you next time. I hope you have an amazing week.